Welcome back to the deep dive. This is where we take those dense corporate reports and, well, make sense of them for you. Today, we're digging into Computer Age Management Services Limited CAMS, specifically their latest numbers for the quarter and half year ending September 30, 2025. That's Q2 FY26. Now, if you follow the Indian financial markets, you know CAMS. They're basically the engine room for mutual funds, the biggest registrar and transfer agent, the RTA, handling, just massive amounts of money flowing through the system.
Absolutely. And our job today really is to get under the hood of these latest results, because there's a bit of a puzzle here. On one hand, CAMS just posted its highest ever quarterly revenue.
Sounds great, right?
Yeah, highest ever is usually good news.
It is, but we need to look a bit closer, particularly at the profit side of things. We need to figure out if this growth is, truly sustainable or if the costs of branching out are starting to bite. So we'll be looking at how they're holding on to that huge, 68% market share in their main mutual fund business.
Their bread and butter. Exactly. While also really pushing growth in their newer non-mutual fund areas, things like payments, alternatives. It's a balancing act.
Okay, let's jump right into that top-level picture then.
Yeah.
Because that headline revenue number, it does catch the eye. Highest ever quarterly consolidated revenue.
Yeah.
It's 376.74 crores.
Yep. And that shows decent momentum. Quarter on quarter, it's up 6.4%.
Yeah.
Year on year, 3.2% growth. Solid.
Okay, solid. But you mentioned a puzzle, a friction point.
Right. Here it is. You look at the profit after tax, the PAT, for owners. It came in at Rs 114.94 crores. Now, quarter on quarter, that's up 5.4%, which seems okay, follows the revenue trend more or less.
Right.
But you zoom out to the year-on-year comparison, and the PAT actually dropped. It's down 6.1%.
Hold on. Record revenue, but profit fell compared to last year. That sounds expensive. Is it inefficiency creeping in or something else? The margins were still decent, you said, around 29.6%?
Decent, yes, but down year on year. And it points directly to that diversification strategy we mentioned. It's not necessarily a red flag, more like, well, the cost of building for the future.
Yeah.
If you break down the revenue sources, the traditional mutual fund part grew 6.4% quarter on quarter. Steady, predictable. But the non-MF revenue, that's where the action is. It jumped 17.9% quarter on quarter and year on year. A big 15.0% increase.
Ah, I see. So they're pouring money into these newer, faster-growing segments, payments, CAMS rep, the AI stuff.
Yeah.
And that takes investment, right? Tech people getting those initial deals signed.
Precisely. You need to spend to capture that market share in new territory. So it hits the short-term profit margin, yeah, but it's what's driving that overall record top line. It's a calculated trade-off.
Growth now, maybe higher margins later.
Yeah.
Sacrificing a bit of today for potentially a lot more tomorrow.
That's the strategy, essentially. Use the the core MF business to fund the racehorses.
Makes sense. And speaking of returns, what about shareholders right now?
Good point. They haven't forgotten them. The board approved an interim dividend. It's Rs 14 per share.
Okay.
And the record date for that, if you're holding shares, is November 7th, 2025. So some immediate return there, too.
Right. Good to know. Okay, so that sets the scene. They're spending to grow elsewhere. Let's double-click on that foundation first, the mutual fund business that's paying the bills.
Yeah, you have to start there. This is their fortress. Market leadership, still firmly in place. Around 68% market share, measured by assets under management, AUM.
68%, that's dominance.
It really is, and the scale is just huge. Their serviced AUM, it crossed R for 52 lakh crore in September.
52 lakh crore. That's hard to even picture.
It is. And importantly, they're not just sitting still. They're growing with the industry. The whole MF industry grew about 16% year on year, and CAMS kept pace. They are the market in many ways.
And are they just holding share or actively winning? What about investors?
Good question. They seem to be actively strengthening their position. Their unique investor count just crossed 4.3 crore.
4.3 crore unique people.
And that base grew 17% year on year. Now compare that to the overall industry growth in investors, which was about 14%.
So CAMS is growing its user base faster than the market average. They're grabbing a bigger slice of the new investor pie.
Exactly right. They're capturing more of the newcomers. And look where that money is going. Equity net sales, that's fresh money into equity funds, hit an all-time high. Over Rs 1.02 lakh crore in Q2.
An all-time high in equity flows. That's significant.
It is. And here's the kicker. CAMS's market share of those net sales actually climbed. It went from 65% in Q1 up to 69% in Q2.
Okay, so when people are actively deciding to put new money into equity funds, they're increasingly choosing funds serviced by CAMS. That says a lot.
It does. It suggests trust and perhaps better service reach or integration.
And behind a lot of this steady flow, I assume, is the SIP, the Systematic Investment Plan.
Oh, absolutely. The GEMIS engine is humming. For CAMS-serviced funds, SIP collections grew 21% year-on-year. We're talking about an average of Rs, 17,555 CACR flowing in gross each month through SIPs they handle.
17,500 crore a month, just steadily dripping in.
Yeah. And their market share of live SIPs, the ongoing ones, also ticked up slightly quarter-on-quarter to 63.4%. Plus, they registered 1.14 crore new SIPs in the quarter alone. That builds a very resilient base. Consistent, predictable revenue.
Okay, so the regular flow is strong. What about lump sums, like new fund offerings, NFOs?
Also quite strong this quarter. There were 33 NFOs launched by their clients, and CAMS absolutely dominated the collections for those. They captured an 80% share of the money raised.
80%, wow.
Yeah, that translates to roughly 28,150 CR flowing through CAMS for these new funds.
When a big fund house launches something new, they clearly rely on CAMS platform.
Seems that way. They even gave an example of the Magnum CR from SBI Mutual Fund. That one pulled in over Rs 1,000 CR just at its NFO period in October.
Big numbers. And are they still winning new MF clients?
They are. Added 2 new RTA mandates this quarter, ASK Asset Managers and Alpha Grip Asset Managers. And they also finished migrating Taurus Mutual Fund onto their platform. So the client count for the core RTA business is now up to 28.
Okay, so the foundation looks incredibly solid. Dominant share, growing faster than the market in key areas, strong flows from SIPs and NFOs, winning new clients, impressive stability.
It really is. It gives them the platform and the cash flow to pursue those other growth avenues.
All right, let's pivot there then to the Beyond MF ecosystem, as they call it, the diversification push. We know it's growing fast. Non-MF revenue share hit 14.4% this quarter. Where's that growth coming from specifically?
Let's start with CAMS Pay, their payments arm. This is really taking off. Revenue grew 26% just from Q1 to Q2 and 38% compared to the same quarter last year. That's rapid acceleration.
38% year on year. What's driving that?
They mentioned securing 25 new deals, and a big focus seems to be on ramping up their payment gateway business, particularly for cards.
Okay, more merchants or platforms using their payment processing?
Exactly, and they highlighted a pretty staggering volume metric, too.
Right.
For UPI autopay mandates, setting up recurring payments via UPI, they hit an all-time high in September. Get this, 100,000 mandates registered in a single day.
100,000?
Yeah.
In one day. That's huge retail adoption. People setting up automatic payments through CAMS infrastructure.
Yeah, it speaks volumes about the scale they're achieving in digital payments, infrastructure level scale.
Okay, payments look hot. What about CAMS alternatives? This is for the AIF PMS space, right? High net worth, more complex stuff.
Correct. And that segment also had its best quarter ever in terms of revenue. They added 44 new mandates, 44 new funds or managers using their services for these alternative investments.
Impressive client acquisition there, too.
And their assets under service, or AUA in this space, is now over 2.8 lakh crore. Strategically, they also made a move in Gift City, that new international financial center. They helped launch India's first outbound retail fund from Gift City, the DSP Global Equity Fund, so planting a flag there early.
Interesting. Getting into that global gateway. Okay, third pillar. CAM SREP, Insurance Repository.
SREP, yeah. Insurance Repository and related services. That grew 18% year-on-year. Steady growth. The highlight here seems to be their platform, BIMA Central. Think of it like DigiLocker, but specifically for insurance policies.
Ah, okay. A single place to view and manage all your insurance policies digitally.
That's the idea. And it seems to be gaining traction. It won a couple of global awards this quarter. They also integrated Tata AIA, so now 4 major insurers are on board.
More insurers means more utility for users.
Exactly. And the user numbers reflect that. They've crossed 12 lakh cumulative unique users, and it's being actively used, processing over 1 lakh transactions a month. So it's becoming a real utility.
Moving from concept to reality. Okay, next up, CAMS KRA. The KYC registration agency. This one seemed a bit quieter before.
It did, but it showed a really strong recovery this quarter. Revenue jumped 45% quarter-on-quarter.
45%. That's a significant bounce back.
It is. They added 38 new financial institutions as clients, too. The key selling point they're pushing is speed and convenience. They talk about a 10-minute KYC process.
10 minutes. That's a huge improvement over the old paper-based KYC shuffle.
Absolutely. Making it fast, digital, seamless. That's the goal. And strategically, This ties into something bigger. They mentioned the integration of NSE KRA is on track.
Integrating with the National Stock Exchange's KYC agency, that sounds like a major integration.
It is. They've received the initial nod from SEBI, the regulator, and they expect revenue from that to start flowing in Q4 of this fiscal year. So it could be a strong end to the year for CAMS KR.
Sets them up nicely.
Yeah.
Okay, one more diversification piece. Think 360 AI, the data science and AI venture.
Right, their high-tech arm. This also showed strong growth, 23% quarter-on-quarter, and a very impressive 41% year-on-year.
41% growth in AI services. But is this just domestic or?
That's the really interesting part. They specifically called out winning 2 new clients in the U.S.
Okay, international expansion in AI.
And one of those clients is described as a listed decacorn.
A decacorn, meaning a company valued over $10 billion, or at least it was privately before listing.
Exactly. Landing a client of that scale, especially in the competitive U.S. market, really validates their AI capabilities. It shows their tech has global appeal.
Definitely a strong proof point.
Mm-hmm.
Okay, let's shift to final strategic items. There was something about the share structure.
Yes, a stock split. The board approved a subdivision. They plan to split each existing equity share, which has a face value of Rs 10, into 5 shares, each with a face value of Rs 2.
A 5-for-1 split, basically.
Correct. Now, this still needs shareholder approval, so it's not final yet.
What's the usual reason for doing this? Make the shares cheaper per unit.
Exactly. It increases liquidity and makes the stock more accessible, particularly for smaller retail investors. ARS 1000 share becomes Rs 200 share, for example, easier to buy and trade.
Got it. And just a note for listeners, the earnings per share figures we discussed earlier, they aren't adjusted for this potential split yet.
Good clarification. That will change if and when the split goes through.
Okay. And lastly, they touched on ESG, environmental, social, and governance. What did they highlight?
On the environmental front, they mentioned some specific actions. Restoring 9 lakes, planting nearly 15,000 saplings across a few states, Tamil Nadu, Gujarat, Maharashtra.
Tangible environmental projects.
Yes, concrete actions. And maybe more significantly from a corporate perspective, they've started the process of setting science-based targets, SBTs. That means committing to specific measurable targets for reducing their greenhouse gas emissions aligned with climate science. It's a step towards more rigorous sustainability management.
Moving beyond just planting trees to actually measuring and reducing their own operational footprint.
Precisely.
Okay, so pulling this all together, if you had to summarize the main story CAMS is telling with these Q2 results, what would it be?
I think it's a story of deliberate investment and transformation. You've got 2 narratives running side by side. First, the core MF business is a fortress. It's stable, dominant, holding that 68% share, improving in areas like NFOs, and it's generating consistent cash.
Okay, the reliable engine.
Exactly. And second, they are aggressively using the fuel from that engine to power up these new high-growth non-MS businesses. Payments, alternatives, AI, KRA. The growth rates there are much higher, but it requires investment. So they're accepting a temporary dip in year-on-year profit efficiency to capture significant future growth and fundamentally reshape the business.
So less about just being resilient, more about actively evolving, using their massive existing base and expertise to build these new tech-driven services.
Yeah, they're shifting from being just the back-end RTA plumbing, towards being a broader financial technology player, an ecosystem provider.
An integrated financial infrastructure partner, not just processing mutual fund transactions?
That seems to be the end game. They're betting that owning pieces of the infrastructure in payments, KYC, insurance access, AIF servicing, that this is worth the cost today.
Which leads us perfectly into our final thought for you, the listener, to consider. CAMS has this incredible base, 4.3 crore unique investors already interacting with them through mutual funds. The big question is, how effectively can they leverage that existing network? Can they successfully cross-sell or integrate their newer services like the account aggregator functions or BIMA Central for insurance to those tens of billions of existing users? Are we watching CAMS make the leap from being a dominant but maybe less visible back-end processor into becoming a truly integrated, front-facing financial ecosystem partner that directly leverages its massive user base? That strategic pivot is definitely the key thing to watch going forward.